What's up, everybody? Welcome to the 35th episode of the Investing Penguin. Covered calls and cash secured puts. A quick note about this video. If you look in the details section of this video, you will see the timestamps. You can hit those timestamps and jump to the different sections of this video. You can also play this video at a faster speed. If you are new to my channel, stick around as I provide the mid-month breakdown for the month of March. And I've got some great ideas on my Facebook and Pfizer trades, so you definitely want to stick around for those. And stick around till the end as I share some interesting facts about these crazy oil and gas prices. And please hit all those buttons. Subscribe, like, and share. It's supposed to help all my YouTube algorithms and make me filthy rich like those Russian oligarchs. But seriously, if you appreciate these videos, then please subscribe and share with your investment friends. For those of you who don't know me, I am the Penguin, and in this video I provide the mid-month breakdown for the month of March. Remember, I'm a retail investor just like you, trying to beat the markets. I like to keep these videos simple, easy to understand with relevant and straight to the point information. KISS, K-I-S-S, keep it simple, stupid, and that's how I like to live my life. Finally, I'm here to show you all the juicy details for free. I'm not here to sell you anything, but please subscribe to the channel. So things are really getting crazy in March. There are sanctions against Putin and Russia. The Russian oligarchs are getting their yachts and bank accounts seized. Putin's invasion of Ukraine continues as Putin commits war crimes and bombs hospitals and kills civilians. Poland is filling up with Ukrainian refugees. Biden tried to make an oil deal. I can understand the Saudis, but Iran and Venezuela? I mean, come on. Maybe Biden should rethink his energy policies and do the smart thing and work with our neighbors to the north, Canada, or our neighbors to the south, Mexico. Well, oil and gas prices have spiked higher. The Fed raised rates by 1/4 of a point, which should be a good thing. And finally, U.S. consumer sentiment is down, but that is not a good thing. The markets are still on thin ice in March. Let's take a look at the graphs for March. The markets got hit hard during Putin's invasion. Is this a buying opportunity? What do you think? Throw it in the comments below. Here's the NASDAQ Composite. Tech stocks are taking it on the chin, especially Chinese companies and Alibaba. I saw Alibaba traded as low as 77 a share. That seemed really cheap, but you just never know with these Chinese stocks. Here is the S&P 500. Here is the 3-year chart for WTI Crude Oil. Listen, I don't want to get political, but politics and bad policy does affect the stock market and our daily lives. And when Biden and Pelosi try to blame Putin on high gas prices, well, this chart explains it all. The price of oil was already on its way to well over $100 a barrel, and Putin's invasion just accelerated that whole process. As soon as Joe Biden won the presidential election, the price of oil took off. The experts, the hedge funds, the algorithms, the high-speed traders, they all knew this was going to happen. But you can make your own conclusions and put it in the comments below. So let's dig into the details. Here are my stocks that are on. If you have rolled dice in the craps game, then you understand the on button. AT&T is off the bench and back in action. Verizon is off the bench and back in action. Pfizer is in process. I sold covered calls and cash secured puts. Citigroup is in process, and I sold cash secured puts on Citigroup when the stock was getting rocked during Putin's invasion. Same for 3M. I sold cash secured puts on 3M when the stock got rocked during Putin's invasion. Walgreens, I'm back into Walgreens and have sold covered calls and cash secured puts. Facebook, we're going to cover these trades in more detail in this video, so stick around, but I sold cash secured puts after Facebook tanked due to earnings. XLF, I sold cash secured puts. XLU goes in the books as a win. My cash secured puts expired worthless. Altria Group goes in the books as a win. My cash secured puts expired worthless. Viacom. So this was kind of a gamble. After Viacom reported earnings, the stock got rocked and I sold cash secured puts, which expired worthless. This trade goes in the books as a win. Kimberly-Clark, I thought I got Kimberly-Clark at a good price at 129.50, but then it got rocked and dropped 10 points. But I'm sticking with it. So here are my stocks that are off. Sitting on the bench, sitting on the sideline, and not collecting any premium because the trading price is too far below my purchase price. So the premium is worthless. I'm really disappointed in my JPM stock. Insert crying emoji here. So we're going to review my Facebook and Pfizer trades. I think you're really going to like the breakdown. So first, let's review my Facebook trades. So as you all know, Facebook got rocked after earnings. And I really don't think anyone was expecting Facebook to drop from 340 down to 240. I do have to give credit to Kramer, as he was avoiding Facebook last October during that whole whistleblower scandal. But there were a lot of analysts on CNBC saying Facebook is a cash cow, and then right after earnings, the narrative changed. The analysts flipped the script on Facebook and they started talking about all the negatives on Facebook, just driving the stock price even lower. I heard one analyst say that Facebook has half of the world's population using their platform. That's pretty amazing, and I use it as well. So Facebook is not part of my investment strategy since it does not pay dividends, so this trade was sort of a gamble. But if I could get Facebook at $200 a share, that seemed like a bargain, a good deal. So after Facebook stock was crushed by earnings, I decided to sell a cash secured put. I had the potential to buy 100 shares of Facebook at $200 a share. On February 3rd, Facebook was trading at $240.89 a share. I sold one cash secured put contract for $1.01 for the February 18th expiration and the $200 strike price. This was a pretty deep out of the money strike price since Facebook stock could slide further due to the earnings fallout. I collected a premium of $100.34, which equates to a 12.2% annualized return. On February 18th, Facebook closed above $200 a share, so the option expired worthless, and I decided to rinse and repeat, baby, and sell another cash secured put. The markets were closed for President's Day, so rinse and repeat that following Tuesday. I decided to sell another cash secured put. I had the potential to buy 100 shares of Facebook at $180 a share. Facebook at $180, that is a bargain. On February 22nd, Facebook was trading at $201.87 a share. I sold one cash secured put contract for $1.16 for the March 4th expiration and the $180 strike price. This was a pretty deep out of the money strike price since Facebook stock could slide further due to that earnings fallout. I collected a premium of $115.44. Then on March 4th, the day of expiration, there was no time value left in the trade, so I decided to close the trade and buy back the trade for $1.01. That allowed me to rinse and repeat and sell another cash secured put on Facebook. In total, I collected a profit of $114.43, which equates to a 23.2% annualized return. So after I bought back the trade, I immediately sold another cash secured put. I had the potential to buy 100 shares of Facebook at $175 a share. Facebook at $175, that is a bargain. On March 4th, Facebook was trading at $199.48 a share. I sold one cash secured put contract for $1.17 for the March 18th expiration and the $175 strike price. This was another deep out of the money strike price. I collected a premium of $116.44, which equates to a 17.34% annualized return. On March 18th, Facebook closed above $175 a share, so the option expired worthless, and then on Monday, I will work on selling another cash secured put. That will be trade number 4 on Facebook. Rinse and repeat, baby. Okay, let's take a look at my Pfizer covered call trades. Back in January, I bought Pfizer at $54.05 a share, and I decided to sell covered calls and capture the dividend payment. But what I really want to emphasize in these trades is that by using covered calls, I am able to reduce my cost basis from $54 a share to $50 a share. I am able to consistently lower my break-even price using covered calls. So in this trade on Friday, February 4th, Pfizer closed below $54.50 a share, so I kept my shares. But look at my break-even price. I paid $54.05 for Pfizer, minus the premium of $1.31. Now my break-even price is $52.74. It's always good to know your break-even price because it will help you in deciding on how to structure and manage your next trade. So in this trade, on Friday, February 25th, Pfizer closed below $55 a share. So I kept my shares again. But once again, look at my break-even price. My break-even price was $52.74 minus the premium of $1.40. Now my break-even price is $51.34. Hopefully now you see how important it is to track your break-even price. So here's covered call trade number 3. So this trade is in process, but I collected a premium of 95 cents, which means my break-even price is now even lower. My break-even price was $51.34 minus the premium of 95 cents. Now my break-even price is $50.39. This basically means that Pfizer today could suddenly drop from $54 a share to $50 a share, and I'm still good. I'm not worried, and I will keep selling covered calls. Once again, hopefully you see how important it is to track your break-even price. So these are all the stocks that are on the radar screen. Stocks that I trade, stocks that I have seen on various investment channels, investment groups, watch lists, etc., etc. Remember, you have to develop your own list of stocks and do your homework. Well, that's it. Time flies when you're having fun. Having fun making money in a down market, that is. Let's hope March ends on a high note. More videos are coming, and stick around for 10 seconds more as I share some interesting facts about these crazy gas prices. I'll let you pause the video and read through these notes. Most of this information is taken from the U.S. DOT, Federal Highway Administration, and U.S. Energy Information Administration. I calculated the average American fills up their gas tank once a week and uses 780 gallons of gas each year. So if gas prices go up by $1, that costs you $780 extra. But look at truckers and buses, they use about 10,000 gallons of gas each year hauling our stuff. So when prices go up, it really hurts the entire country. Money music, the Beatles, Can't Buy Me Love. Can't Buy Me Love was written by Paul McCartney and credited to the Lennon-McCartney partnership. The song was included on the group's album A Hard Day's Night in the single top charts in the UK, the US, Australia, Ireland, New Zealand, and Sweden. In the UK, it was the 4th highest selling single of the 60s. McCartney was quoted, "The idea behind the song was that all these material possessions are all very well, but they won't buy me what I really want." Disclaimer: I am not a financial advisor. This video is for entertainment and educational purposes only. And I really hope you enjoyed this video. I am only sharing my experiences and opinions. Investing involves risk, so please seek advice and educate yourself.